did your Monday look like in terms of trading outrights or trading options? What were you looking at? And what were some of your most successful and least successful ventures yesterday, the first time that we've seen VIX healthily above 20% and so many other indicators of movement and opportunity in the market? What were you getting down to yesterday?
So I think it's interesting because Tom actually said something about this yesterday. I think he said this on the two Utes, but like yesterday was probably like day 3, I think it was, of sort of this down move that we've been in. And then, of course, coming out of the weekend, the Delta variant talk really kind of spooked the markets. And so we had this big move down. So like the fact that it was like day 3, honestly, I had probably used a decent amount of bullets like on Thursday, Friday last week. So I was good. I didn't really feel the need to go. I mean, sure, you could have gone out and gotten better, prices. You could adjust strikes, but I didn't feel the need to do that. I felt like I was good where I was with a lot of my trades. There were a couple of things that I was interested in coming into. There was nothing that really interested me. As odd as that sounds, as far down that we were, there were 2 things that I was interested in possibly doing, which was getting short some volatility via either VXX or UVXY. And then it got to the point where I realized that oil was making a big enough move for me to trade out of something that I didn't think was interesting, which I had this, poor man's covered call on an Apple. I decided to get out of that so I could free up some capital to get in oil because I thought that oil was a better trading opportunity. So that was probably one of the better trades I did. And then I also ended up putting on a Boeing short put spread. So those are probably 2 of the better, I wouldn't say better. Those are the 2 of the trades that I felt like had the most opportunity coming out of yesterday. And that's what I did.
And everything that you just spoke about, Jermal, speaks to the idea of bouncing risk on markets, like be it stocks or be it crude oil, which we're going to tackle mainly today. There is this tendency to bounce. Like we've talked about this so many times. I always come back with this fact, like the day after a significant sell-off in the stock market, the likelihood of seeing green in that stock market goes from like 50 to 55% on any normal day to like well north of 60%, like pretty significantly north of 60%. And that's edge. And that's why, you and Tom Sosnoff and other options traders jump in on days like yesterday when we're seeing a big stock market move to the downside. But, this is coming off of, like we like to joke, like S&P in the last 3.5 years has gone from 2,300 to 4,300. Yesterday, it barely got down to like 4,200, 4,100, not even. And so like, you don't want to necessarily buy a bunch of stuff, but selling puts and all these different things are good short-term activities because you got the bounce back here today. You didn't even get it this morning. It took until pretty much midway through today to get that stock market bounce in stocks and yields in crude oil and everything else. So there is the tendency to get that bounce. And selling puts is a great thing because even if you get there early, like Friday of last week, or Thursday or Wednesday or Monday of last week, even, Jermal, you can do what you just did, which was like, I was good with it. Even with the stock market crash, you're probably not hit on that strike. And it's like, I can sit through this and lean on that bounce that's likely coming, and it did come today, and not have to adjust stuff or move stuff around. Futures, very, very different story. And that's what we're going to get into is how do you trade a crash in futures? Because it happens very rarely. And with these rare moves are two-sided. And I want you to maybe give your take on this as well. To me, it's always like market crashes, the one that we saw yesterday specifically in crude oil, something we haven't seen since April of 2020. And also the move today, this morning, extending on that, an even rarer move, something that happens 2 or 3 times per year. And so it's a two-edged sword here, or a two-sided coin, whatever analogy you want to use, in that like it's super rare, so you want to jump on it. But when you're in the midst of it and it's moving through you, it's so scary that you want to get away from it. And so like it is, and the best way to remedy that is with mechanics. Like you've probably been a part of this situation, just like you were talking about, like puts in Boeing. You want to sell puts in Boeing when that stock is crashing, but when that stock is crashing is when you're the least confident in the stock, right? Like it's hard to deal with, but that's the best value, isn't it?
That's the best value. And if I can even back up and make this even more interesting, we've talked about this in the last week or so with oil with regard to that. Yep. I think I told you I was short oil 72, 75, 72 in the orders, as the old traders like to say. I was short 72, 75, and it was going up in my face. And it went up to maybe 75. I didn't close there, but I think it came back down to about 74. I ended up closing it for a dollar loss or $100 loss because I just didn't have a handle on it. As a matter of fact, after I closed it, it came back down to about 71, and I actually got long. And I was directionless. I wasn't really sure what was making sense, so I kind of got out, and I had no position on. And me taking that small loss, like we were talking about last week, taking that small loss enabled me and opened my brain up to realize when this move happened, this was a better opportunity. At least it seems. Who knows where it's going from here?
Sure.
But this seems like a good opportunity. Like you said, in the face of this opportunity, now I'm looking at a situation where I want to get long. And so that was the same type of deal yesterday, that I have with Boeing. Again, I mean, it's working today. I don't know what the next couple of days are going to look like. I'm short, put spread in August, but it was the opportunity that presented itself over, after yesterday's big move that I felt like this is a good opportunity here to get long.
Absolutely. And I'm glad that you spoke to being directionless, because that happens more often than not, right? Like a market is kind of like drifting in one direction or the other. And you're like, all right, let me see if I can get short here and take 50 cents or $1 out of crude oil. Oh, I was wrong. All right, fine. Let me get out of this. Because being directionless is fine if you have strict mechanics, because if you don't have strict mechanics, then you're long from 71, and then the market opens down at 69 yesterday morning, and then crude oil extends all the way down to 66. Today got all the way down to 65, touched 65 and bounced off of that. And the last thing you want to do, Jermal, is have a position from that directionless period when the market's not so interesting and just sit through it. So what you did is perfect. Now you got short and you took like $100 loss, and you got long and maybe you scratched it or took $100 loss. But dude, that is so much better than sitting long from 71, seeing the market open at 69, and then sitting on that all the way down to 66 and then 65 today, and still sitting with hundreds of dollars in losses, as opposed to just being slightly more active there, taking a couple losses, what we talked about last week, taking losses. If you haven't seen it, it was a great pair of segments on the leap. That frees you up for this opportunity, and it cuts those losses amid the crash, because yesterday, even if you waited until the stock market opened, Jermal, you would be out from high to low $300 in the small futures, which isn't so much. But if you were looking at the traditional crude oil futures, $3,000. And the last thing you want to do on a day like yesterday with down moves and bounces and down moves and bounces, and then this morning, a big down move to a new low, and then a huge bounce higher, worse than a $300 loss is having your hands tied from the beginning, right?
Absolutely. And I was going to say, to add to your point, like, you'd be down $300 with probably the prospect of maybe lower. We don't know, right? Yeah. Like, we don't, this has been new. This one is news driven for sure. A lot of times it isn't oil, but this one is definitely news driven from, that you can dig into that dynamic if you want and read about it. But the fact remains is that, we've had this big move because of supply. They're going to add to the supply now. And now we have this big move down. And for me, I looked at something that Tom Sosnoff loves so much. I looked at the technical of it and the level. It was actually getting in close to the 100-day moving average. So that's where I felt like it was a decent area to get long. And with that, like a lot of times, you can wait till it gets right there, similar to yesterday with the SPOOs with SPX, it got to the 50-day moving average. Sometimes you got to go in a little bit ahead of those, maybe not, it's a risk, but again, you look at the type of move that's happening and you make that type of decision.
Well, because here's the thing, like stuff can get out of hand quickly. Like we just talked about, to the tune of $300 with a small future or 3,000 with a traditional future amid these, rare crashes. Now, you don't want to just look at something like that, Jermal, and say, oh, well, then I'm just going to avoid trading a crash altogether, because guess what? Crashes are the most opportunistic moves in the market, right? Like everybody, myself included, I'm getting to an age where I'm thinking about potentially, buying a place here in Chicago. And there's always this idea of like, man,
Party at Frank's house.
real estate just goes higher and higher and higher. And man, I wish that we were in the middle of a crash so I could buy it then. But then when the crash occurs, so many people are like, well, I don't know when it's going to end, so I don't want to take part in it. What I'll say, the most ideal way for me to actively trade a crash is to use strict mechanics and active management. Because to your point, Jermal, the market could have gone from $75 a week ago down to 71 on Friday, 69 yesterday's open, 66 yesterday's close, 65 middle of today to 55 next week. And guess what? That does maybe incite some fear in you and make you not necessarily want to trade crude. But if I know every time I trade it, hey, I'm just taking a $100 loss or a $50 loss because I'm only looking for $100 to the upside or $50 to the upside, taking that active strategy goes miles in terms of making me feel better about what I don't know, which is where the market is going to stop. All I know is that we're in a rare outlier move. And I have markets like small U.S. crude oil that allow me to, in a small manner, go at that opportunity. If I apply strict mechanics to that, that means that I'm not going to get caught up in that outlier move. This market could go back to negative like it did last year, but with my active mechanics, I'm not taking thousands and thousands of losses. I'm just peeking my head in for yesterday, what would have been if I, market opens at $69. I wait for $1 of downside movement on top of that to get long. I get long at 68. Guess what? It went straight down to 67. I'm out for a loss. And what that means, Jermal, is I missed the move from 67 down to 66. I can get long down at 66 and get back by yesterday's close, $50 amid a crash in crude oil of $300. I essentially scratched, only lost $50 in buying that market. That's huge for trading a crash. And now today you got the big bounce back. So if you held on to that long contract through yesterday, you'd have gotten back to even or potentially profits. Active management essential for trading a crash in crude oil, stocks, everything else, right?
Absolutely. Yeah. I mean, you nailed it, man. I mean, having active management, having those strict mechanics really kind of help you out. We've touched on this, again, and I'm new to trading futures. As everybody knows, I'm new to trading, an oil future. This is definitely one of the ones that you're always kind of nervous of because it does make big moves based off of a lot of geopolitical reasons at times. But, this is definitely one you have to have strict mechanics on, and trade small, trade often is definitely one to use here. You definitely, just because we had this big move doesn't mean like, oh, it was just like you said, just at 75 and now it's at 65. This means I want to get in here for sure because it was just 75 not long ago. You really don't know. I mean, I don't know where the selling stops. I mean, yeah, we had a rebound today. It could be a small dead cat bounce, and then we could resume some tomorrow. So paying attention.
Absolutely, man. And this is something I think resonates with the options traders out there because like you sell a put, an out of the money put, to take advantage of, premium and all these other things, but you also do it because you don't know where that market's going to stop. You're just seeing a big move lower in the stock market, a big increase in volatility and thus premium in those options. And so I'm going to sell a put into that market knowing that if that market continues lower, I can roll out that put. I can roll it out and down most likely for a scratch or no credit. I have all these different things. Futures, it's the same thing where it's like I'm buying this crude oil market knowing full well that I have no clue where it's going to stop. But I'm not going to let that fear keep me out of better opportunity, much in the same way of higher volatility and options trading, better opportunity in futures around outlier moves because I have mechanics. If I have those mechanics in the same way that you roll out a put, you roll it out and down, you sell a call against it, all those different things, take that $100 loss and then get in when that outlier flashes again. You can make it back and then some, at least get back to scratch, much in the same way of rolling out those options and everything else. I mean, the crash, like I said at the start, it's always an intriguing thing because it is a pairing of the best opportunity, but the most fear in the market. And so you have to find, I think, with your mechanics, a good remedy for that, where it's like, I'm looking at a decent size opportunity, be it, $20, $50, $100. And I'm also looking at this from an angle of like, if this gets out of hand, I'm not going to let it get out of hand for me. And that's how you trade at the end of the day, a stock market crash with futures.
I like it, man. As a matter of fact, you should create a new shirt, Smalls Mechanics, because you kind of look like you could be a mechanic with that cool tat you got on the arm. Right kind of like Smalls Mechanics. That's something we need to create, my friend. I like it.
I think a lot of people at home appreciate it too, because this is new for future. Like, I feel like options, and this is why, your show here is in my mind doing so well, is because options is ripe with mechanics. And, like, if I do this strategy, I can do X, Y, and Z. And a lot of people in futures, I think, they think like, oh, if I buy this future, I'm just waiting for it to be in my favor. And it's like, no one ever buys that low. Like, literally, crude oil touched 65 and bounced right off of it today. A handful of people bought those 65s, but a lot more people bought 65 quarters, 65 halves, 65 75s. And, having mechanics makes you feel so much better dealing with those movements. And I think a lot of options traders have those mechanics, and we are becoming the futures mechanics guys. Now, I know absolutely nothing about being a mechanic for any kind of car or bicycle. Like, I have a bicycle and it wasn't shifting down. I had to take it to the shop because I have no clue how to fix any of that. I can't.
Let me just take that compliment back then. Just give it back. Yank it back through the screen.
The tattoos and everything are just like, it's a facade.
Oh, I didn't know you had another. That's not. Check that out. Look at Frank showing up the guns on the screen.
Come around, man. Come around. Yeah, you should see me when I'm wearing the tank. I'm at the beach. Oh, baby. We'll see if I can get that this weekend with the bachelor party, hopefully.
And that's where you need to go. That's where you need to go. Before we leave, could you make sure you don't tell Tony I'm in his seat? It's between you and me. I know. Don't say anything. One last thing on the mechanics. It is important, especially with futures, I feel, because a lot of times there are so many different things that are moving these futures, right? Like, that's the whole deal there. Whereas like stocks, it's just like, you make widgets. Have you made a lot of widgets this quarter? Cool. You're going to go up. It's a different feel. So the mechanics definitely help.
Absolutely, man. And thank you so much for helping us instill these mechanics throughout the audience here, everybody at Tasty Trade. We love doing it because we see so much opportunity in these futures markets and these different assets that don't just make widgets, which, you can get blindsided by some of this stuff in crude oil and everything else, but that also creates that unique opportunity. So we really believe these futures markets have those unique opportunities, and you have been essential in creating those mechanics and creating an easier path for people reaping those benefits of this unique derivatives tool. But enough, Jermal. This has gotten too nice. This is
too nice.
We can't have too much of
Make
this,
it there safe this weekend. Have so much fun that you throw up. And maybe I'll see pictures of you wearing something that you shouldn't be wearing because you're in a bachelor party and you're in a house full of dudes and there's no telling what's going to happen. I'm sure shaving cream is going to be used inappropriately this weekend. That's the kind of thing I'm anticipating.
It'll get.
I'm going to need one of your friends' numbers before you leave so I can get pictures from them, because I know you're never.
No, I'm willing to share between you and me. Absolutely, we'll see what makes it on the show. I know producer John always gets. He's got a side Slack channel with Pete, and Pete will send him photos from time to time. So we'll see what makes it. Thanks so much for the kind words there, man. I will be safe traveling out to the East Coast and back. But in the meantime, we still have some more shows to run. Jamal will be back here on Thursday with Pete talking more about trading stock market crashes and everything else. Splash into Futures is coming up next. A different type of day, another big move in the market, different direction this time. We got plenty of stuff to do. So stick around, everybody, and thanks for watching The Leap.